Hey guys, Keith Boykin here, Tennessee Home Specialist, Blackwell Realty, and we're with Jackie Hurtis from Interlink. And we're going to talk about down payment myths. So I got to have 20% down to get a house?
Yeah, that's the most common myth I hear.
But that's not true? What?
It's not true at all.
Oh, okay.
It's not true at all. I know a lot of first-time home buyers think that, and then you have
Yes.
people who bought a house 20 years ago, parents telling their kids who are now first-time home buyer age, you have to have 20% down to get into a house.
Which is not true at all.
Not true at all. We have programs anywhere from 0 to 5% down for primary residence.
And the 5% down is conventional,
Yep.
correct?
Yep.
So even if you go conventional, you do not have to have 20% down.
Correct.
Now, when you get into your down payments at that from 0% to 5%, you're generally paying what else in your payment? Like PMI?
Yep. So on any loan that you do, you're going to have some sort of mortgage insurance on there if you're not doing the 20% down. Conventional, if you have great credit, it ends up being a little bit cheaper than if you were to go the FHA route.
Correct.
If you have lower credit scores, you go FHA. The mortgage insurance is standard across the board for everybody. On the conventional loan, if you do less than the 20% down, you'll have the mortgage insurance on there for a while, but once you get enough equity in the property, it falls off.
Where FHA, it does not.
Correct. If you do the minimum down payment on FHA, which is 3.5% down, it stays on there for the life of the loan.
Correct.
If you do more than that, it falls off after a certain period. Or a lot of people refinance, get into the house with an FHA loan for the lower down payment, refinance into a conventional loan down the road to get rid of the mortgage insurance.
Correct. And actually, that's really good advice for what we're in right now, because while you marry the house, you date the interest rate, correct?
Yep. Yeah, I've been hearing that all over the place. Yep.
Because you're going to stay in that house. You don't have to stay in that interest rate. That thing can be changed 6 months down the road after you move in. So just remember that even though you have PMI on the loan at that point, it doesn't mean that you have to stay with the PMI.
Yep. Or the loan program or the interest rate.
That's correct. So what other wonderful myths do we have about down payment?
That's a good question.
Other than 20%. Now, the down payment does have to come from you or a family member, correctly?
Yeah, you can do gift funds. They're particular about who the funds come from. Typically, it has to be a relative, blood relative, or through law. So you can have like in-laws or somebody
Correct.
gifting the money. You just have to be able to show exactly where the funds came from.
And they want documentation on all of that, am I correct?
No cash. The biggest thing is absolutely
Yes.
no cash.
Yeah, please keep the cash in your bank account. Same thing when you're doing earnest money. I don't want you to bring me $500 or $5,000 in
No.
cash. None of that works. I got to be able to see where it's coming from. So a cashier's check, money order, all of those wonderful things will work with earnest money or down payment.
Yep. Just make sure that you can source it. You can show the lender exactly where that money came from.
Correct. All right, well, you can always reach me at 615-788-9356. Jackie?
608-347-0756.
Guys, like, share, subscribe, all those wonderful things. And, let us know what you're afraid of with down payments. If there's any questions that you have, you can reply back on this comment thread. Thank you, guys.
Thank you.